In other words, Z signal precasts the price itself. Now, we've had people ask some of our traders, well, how much money do you make doing this? Blah, 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 blah. Okay. To me, it's not a fair question, because what you're really asking our traders is, how good a trader are you? So I'm going to throw the question back at you guys in the audience here. How much money would you have made trading this price line if you had up to your head? Okay? That's the actual price of the Dow. How much money would you have made trading it? Well, that is a fair question, because that's the question that you guys want to ask our traders. How much did you make trading the price? Okay, the question really is, how accurate is the price precast? And I made a note here. I heard this said by somebody a while back. There are some traders who could lose money with tomorrow's Wall Street Journal, and you all know that that's the case. Trading is a strange profession. So what's the signal range reliability? Okay, for one thing, experience has taught us in Paradigm to go out a maximum of 90 calendar days for a best trend price level fit. Remember, this work has anything to do with price magnitude yet. It is a serendipity, a curious observation, a phenomenon, that when we do a moving average on the rate of change planetary signal line, we're getting the price. In the case of sugar, we got the price for 10 months. In the case of soybeans, we got an incredible fit for over 2 months, including a drop that nobody expected could ever happen. Same with corn. Same with other assets, okay? So the signal precast line at this point, this is still in the research, is not retrended. So there's no trend in the data, all right? There's no trend in this data. So 90 days out is a pretty good fit for the amplitude of the moves we're expecting. The trades taken by our traders based on current signal price precast reliability have averaged to be extremely profitable since March 2013. What do I mean by that? Let's take a look. Okay, here's the experience of our traders. Since March of 2013, up until the present, say about a month ago, because we haven't updated our records because the government shut down, we don't know what happened, we're still learning. We just recently got the new cash prices on some of the assets we follow. So up until about a month ago, before the shutdown, there were 71 trades recommended since March. Out of the box, 63.4% were straight up good. No problem. Out of the box, 11 of these trades, or 15%, were discovered to be inversions somewhere along the way, and where they're stopped and reversed or bailed, depending on the trader and the way the guy trades. That's up to the trader. And we did have 15 of 71 bad trades, so 20% noise. But the signal didn't make any sense in comparison to what we thought was going to happen. So overall, when you take the inversions as being a stop and reverse, we got about 80% signal purity right now is the best way I can explain it, when you take into account the inversions as are identified, that we're on the right track. The good trades that we experienced on these right here made 151% profit, counting each trade as $1. That's all we can do. Nobody's going to trade $15,000 a Dow. And people are going to trade futures. So all we can do is base it on 1 point move in the underlying equals $1 profit. That's all we can do. And so the good trades, 44 to 71, produced for the Paradigm Trading Group or traders that traded it, if they had traded all the trades, 151.48% profit. The inverted trades could be turned into winners if somewhere along the way, as experienced by a couple of traders, they stopped and reversed and became winners. So I can't really score these as good trades, but I can't score them as bad either. So what I put here, which is the closest thing to the truth I can give you guys, which is what I want to give you. If you inverted the stop and reverse trade, you could have to 35% additional money up to tacked on top of that. Can't get around the fact there's noise in the system yet. 20% would have produced 38% losers. So that means if you subtract the losers from potential winners, up to 86% profit with an average length of trade to 18 calendar days. No matter how you look at this, guys, that is some significant money. This is a reality that we are creating. We are pre-creating. We are precasting the price itself. What else do you need to trade but the price? And it's getting better and better every week. You're going to hear from some of our guys in a minute.